The dollar is going to go down, gold is going to go up, and so this was just an opportunity. This late day sell-off is another opportunity, a big rally in gold on the back of this 50 basis point rate cut. And of course, I do believe that the economic data, so I mean, all this stuff is going to blow up the deficit. That's why Powell is cutting rates. It's because we can't afford the rates we've got, even though they're too low. They're still too high considering the enormity of the debt. And so that's the reason. But he had to kind to, pretend that everything was great, even though we're cutting interest rates by 50 basis points, when the reality is it's not great. And the fact that he cut is proof of that. Now, the markets initially rallied, the stock market rallied, gold, as soon as the announcement came out that it was 50 basis points, gold rallied and then rallied again. It didn't take out 2,600. It did make a new all-time record high. We got above 2,595. And the gold stocks had a big rally initially. So the GDX and the GDXJ both hit new 52-week highs earlier. But then when Powell started to speak, and some of the things that he was saying was interpreted as being, hawkish, like he talked about how strong the economy is. But what did they expect? He's not going to acknowledge that the economy is weak. When asked specifically about the balance of risks, if they had tilted to employment over inflation, Powell said no. He said that it's basically neutral, that the Fed is equally worried about inflation and employment. So it's not that it's more worried about unemployment, but that was a lie. Of course it's more worried about unemployment. That's why it's cutting, because the idea that they're tight is nonsense. They're still loose. And so they're cutting because they need to be looser for a lot of reasons. One of them is employment. But I think when Powell said that, that kind of spooked the markets. Also, Powell said that, hey, don't expect, just because we cut 50 basis points this time, we may not cut 50 next time, right? And we may not cut it all next time. We're still playing it meeting by meeting. We're data dependent, going back to that. Even though all the people who fill out these dot plots, they're all projecting more cuts. Powell didn't just come out and say, yeah, we're cutting again. We're cutting next meeting. We're cutting the meeting after that. He kind of, claimed that, well, we're still data dependent, so you never know. If we get some bad inflation prints, we may not cut. Hey, we may even hike, right? So he left the door open. And so I think that, took away some of what he had given. And that's one of the reasons you saw reversals in the markets, including the fact that, it's a buy the rumor, sell the facts. So you get traders taking profits. So the market sold off and went negative. It wasn't a collapse, but they lost the gains. Gold reversed, closed negative on the day, maybe about 10, 12 bucks. I think at its highs, gold was up maybe like $25, something like that. So the gold stocks, which were up 3-4% on their highs, ended up down about 1%. So a lot of profit taking as a result of the press conference. But I think that's just a one-day event. I think what happened was extremely bullish for gold, and I think the big move is going to be higher. I think the next rally will take out 2,600. Same thing with the dollar. Dollar made a new low for the year on the yen, almost took out a 140. We did take out 84 cents on the Swiss franc. We closed back above it, but that was a new 13-year low today in the dollar against the Swiss franc. So, the dollar is slowly starting to break down. The pace of that breakdown is going to pick up now that the cat is out of the bag. We've had this 50 basis point rate cut, and we've got more rate cuts coming, right? So the dollar is going to go down, gold is going to go up, and so this was just an opportunity. This late day sell off is another opportunity. So if you didn't buy more gold before the Fed cut 50 basis points, you can still buy it tonight. You can still buy silver. Silver, is still above $30, but, it's below 31. It had gotten above there. But silver is a good buy right now. Hold on. A big rally in gold on the back of this 50 basis point rate cut. And of course, I do believe that the economic data that is going to be coming out in the weeks and months ahead is going to be negative data. It's going to be negative on the economy, negative on manufacturing. They're going to have some negative jobs numbers. And the stronger inflation numbers may not show up for another few months, right? I mean, they may come out around where they are. And so as long as inflation isn't getting worse, right, the Fed can ignore the data because the Fed is already confident, right? They're saying we know that inflation is going to go back down to 2%, although Powell was careful not to say mission accomplished because he actually said that. There was one of the reporters that asked, would you say you've won the inflation fight? And Powell said no, which kind of contradicted what he said earlier about the confidence he had, and that's why he cut by 50 basis points, because he was so sure that inflation was going down to 2%. But then he later said, well, we're not sure, and so we're not going to say mission accomplished. Well, then, if you're not sure, why'd you cut by 50, right? So nobody really asked that. But I think he was afraid to say mission accomplished because, it's probably not accomplished. So he came out with that. And so that might have also been a negative for the market. Maybe the markets were waiting for him to say, yeah, mission accomplished. Although, from my perspective, he basically did that with the 50 basis point rate cut. But again, remember, when inflation was below 2% and rising, Powell never raised interest rates to get ahead of inflation. Say, look, we can see it's going up, so we're not going to wait for 2%. We're just going to start hiking now before we get there. No. Powell actually said, we're going to let it pass 2%. Right? Even though our target is 2%, we're not going to start hiking at 2%. We're going to let it get above 2% before we start hiking because, we want to average out inflation, right? We have this inflation averaging now. So we're not going to rush, right? We're just going to, let inflation move above. Well, they have the complete opposite attitude on the way down. If the Fed was consistent, the Fed would say, we're not going to start cutting rates until inflation is below 2%. And in fact, what Powell should be saying is, we were above 2% for a long time. We were way above it. We need to average that down. We need to have inflation run below 2%. And if the economy really was as strong as Powell claims, why not? Why not let inflation be below 2%? We got this great economy. We got this super strong labor market. Why not have 1% inflation? I mean, wouldn't that be a relief? Although that's still higher prices. But no, Powell knows the economy is so weak, he can't wait for inflation to actually get down to 2% or, heaven forbid, go below 2%. He needs to start cutting now, and he's just going to roll the dice and hope that inflation keeps coming down. But why should it? He's throwing gasoline on the fire. Why should the fire go out when he's now stoking it? Now, another important point that he made, because somebody asked him at the press conference about the balance sheet. Like, hey, what are you going to do with the balance sheet? Now you're cutting rates. What about the balance sheet? Because, you're shrinking the balance sheet. You're going along with QT. Isn't that, counterproductive, right? Because on the one hand, you're easing with rate cuts, but on the other hand, you're tightening by, shrinking money supply or by, shrinking your balance sheet. And Powell said, it's not really a contradiction because he said, we're just trying to get to normal, right? We want to have a more normal policy. And so that means lower interest rates because they're abnormally high, which again is a lie. They're still too low. It's like we create a phony benchmark. We lower interest rates to 0, and then we claim, 5% is high. Well, relative to 0, but why is 0 your benchmark?